So this was a little bit of a different direction than Travelers posted and displayed yesterday in the market. Tell us about the underlying business and what's driving it.
Well, the underlying business is pretty strong on a global basis. You know, half of our business approximately is outside the United States, half in the United States, and we're experiencing more favorable conditions in the U.S., Asia, Latin America, and so pretty broad-based growth. A lot of organic strategy driving that in different territories, different areas of the business, and then pricing and terms from an insurer's perspective are improving. And so we're taking advantage of that.
Pricing, you mentioned, and a lot of the analysts are writing about today. The environment is becoming better. What kind of rates are we looking at, and what's driving the increases?
Well, it varies by class of business, but for a number of years now, rates have not kept up with the rise of loss cost inflation. And so that creates margin pressure and in some cases balance sheet pressure for insurers. And so it's rational after a time that those who chase market share rather than a proper price start to pull back, and that creates opportunity. And you know, we're a very professional and well-experienced insurer, and we see opportunity to take advantage of better trading conditions.
There was one issue that you highlighted that I think we got out of Travelers as well, and that is the rise of securities class action litigation against corporations. What exactly are you seeing?
This has been a trend that has been going for a number of years. By example, there is over 80% of all M&A that takes place in the United States has a suit against it. You paid too much or you paid too little. Or disclosures weren't good enough. Most of that is a drive-by shooting by the trial bar, which is a money-making industry, simply to get a quick payout and move on. No aggrieved shareholders share in that money, by the way, that's paid. And so, you know, there's one example, and it's across a number of areas of the securities where you're seeing a rise of directors and officers suits for a variety of issues. Anytime a company announces bad news or something unfortunate happens in life, it results in a shareholder suit.
When it comes to portfolio management, where is yield attractive, reasonable, underpriced? Where's risk right now, do you think?
It's pretty hard to find where it's underpriced. And, you know, we don't chase yield. We're not going to move up the risk curve. We invest on a risk-adjusted basis, and you're kind of playing between the wall and the wallpaper there right now, Carl.
Yes.
But we have, our invested asset base is growing, and that helps to ameliorate, to a degree, a decline in yield, and so helps us to maintain growth in investment income.
You and your family, so to speak, have a long history in Asia and China and doing business there.
Yeah.
You are, I think, the chair of the U.S.-China Business Council. Is there any business that's actually going to be done between the U.S. and China in the future? Are you concerned given the current environment?
I am concerned. And there is a lot of business that is done between U.S. and China. And by the way, we are pretty well interconnected in many ways. And I think we forget that an awful lot. I think the U.S. Consumers and U.S. workers benefit from our trade with China. And at the same time, Chinese benefit tremendously from the market prowess and the capabilities of U.S. companies. I think the notion that we're going to decouple from each other is ultimately a fiction. I don't think it's going to serve the interests, not going to serve prosperity or security of either. And so, we need to find a path to reach an agreement that addresses the grievances that are legitimate
What are your thoughts about that? I would assume you have some deep relationships in China itself. We hear about more hardliners now in terms of at least some of the negotiators that are taking to the table. There's going to be a new round coming up. Do you think progress can be made, or are the two sides simply too set here and the issues too large to really be able to be addressed in the near term?
You're not going to get 100% what you want in agreement. And this won't be the last agreement. But if you can get 50% of the way or greater, you made great progress. to advance the interests of American business, which I think is to the interests of China as well. We know the economy is slowing down. We know that the more market-oriented they become, the more every dollar that is invested in China has a greater return, and we're seeing a decline in that return as they are more centralized and more party-oriented in how they allocate capital. So we're on both sides of that. Both sides have hardliners. And both sides, the room to maneuver, the political room to maneuver has been narrowed. But there is, and there should be, room to make a deal, because ask yourself what the alternative is. The alternative would be a world where there'd be greater decoupling, and who's going to benefit from that? Well, and the notion that we start framing China as an enemy, and that China starts framing America as an enemy, I think starts to fulfill a future that is not in the interest of either country.
But for those who argue that their intentions are not genuine, that they walked away from Buenos Aires, left at the altar, essentially, some believe. Christopher Wray's testimony yesterday about the number of IP investigations the FBI has. I mean, to what degree do you think they're trying to play us or wait out the clock?
I think there is an element of that. And look, I'm for, and we have to protect our interests as a country. We're a nation of laws, and we shouldn't allow ourselves to be, we should defend our interests against theft of our property. Of course we should. And we are more market oriented, and therefore Chinese companies can enjoy the benefit of the American market. We should be able to enjoy the benefit of the Chinese market the same way. Those are all legitimate, and we should pursue those. But simply a path of tariffs and yelling at each other from afar is not going to solve that.
Well,
and it is in China's interest, I believe, and I think they know it's in their interest to engage in a productive path to this with the United States.
I just want to bring up the fact that you have a very big joint venture, correct, with one of the Chinese insurance companies.
I have a joint venture in China.
Yes.
And we have a 100% wholly owned subsidiary in China.
So what do you see as a result of the friction and the tariffs and everything that's been happening? Is it affecting your business?
No, there has not been any discrimination against our business. And I think if you talk to most American companies, it's been a mixed bag, but it's been marginal, the impact to date.
Evan, finally, as a Chubb customer, my rate's going to go up next year. They went up last year.
They went up last year?
Yeah. And then I did some things to sort of get them down. I had to call and work through it and figure out some coverages. But am I going to have to do
I don't know.
I'll
take I can't react specifically, but I'll take this offline with you. I got it.
Okay, but I'm talking as a general customer. Should I expect my rates are going to go up?
Loss costs in homeowners insurance, so you know, have been rising at 9% a year. And there's a variety of reasons we could go into about that. We're just trying to make a reasonable return, not some outsized return on you. But what you'll never be delighted about the premium you pay us. You'll be delighted about the service if you ever have a claim.